Hello and welcome to Insurance Business TV for our second Professional Risks Power Panel of the Year for Australia. We've gathered our experts. Genevieve Matthews is Client Director with WTW Finex, and Nick Beswick is Head of Professional Indemnity in Australia and New Zealand for Newline Australia Insurance, and Sjoerd van der Meer is CEO of Omnisure. They're all Sydney-based. Nick, it's your first time on the panel. Firstly, welcome on board.
Thank you, Dan. It's good to be here.
Yeah, good to have you. Let's just start with a quick overview of the market. In your view, how soft is the PI market right now, and what's driving that?
Well, it's definitely softening, but in my experience, the market doesn't tend to move uniformly. So it depends what sector and occupation you might be sort of dealing with, and they can come under different pressures. As a general rule at the moment, the SME sector is sort of facing enormous pressures, more so than open market, middle market, and corporate business. And the SME sector is highly facilitized, so whole portfolios can come under pressure rather than just individual risks. There's a range of reasons that could be driving that. I think the main ones include sort of variations like the individual risk profile based on the activities and project types, perceived risk in the market of a particular occupation more broadly, market forces such as defensive action that might be taken by insurers to protect their portfolios, attempts to maintain relevance and scale throughout the market cycle can often drive a softening of rates, and the ongoing release of claims reserves from the harder market period that preceded the current soft market, as insurers release reserves to sort of maintain underwriting results in what is otherwise a generally deteriorating market.
Thanks. That was a really substantial answer. Genevieve, the pressure's on you. Welcome back to the panel.
It's good to be back.
Yeah, nice to have you on. I mean, how do you see PI right now and the drivers?
Yeah, well, a typical broker, I will always go for the more positive spill. We've seen it stabilize, so it's definitely been for a broker a good time to be in insurance. And with the premiums being leveled off, that we're seeing more competition, particularly in the lower risk areas. We are seeing underwriters are still quite picky, particularly around construction, financial service and tech. And that tends to be because the claims are a lot more complex. A big trend that we're seeing, particularly for those in the construction industry, so professions providing services there, is the growing complexity of contracts, particularly for big infrastructure and government projects. Clients are pushing liability further down the chain. So insurers are tending to carefully check the scopes, wanting to see these contracts and have discussions with brokers, particularly during the renewal stage. There's questions around liability limits and how clients are mitigating that. So I would definitely say that that's one of the drivers in this space.
Thanks, Genevieve. And Sjoerd, firstly, welcome back to the panel.
Thanks, Danny.
Yeah, good to have you back. How do you see PI right now?
Look, I think the guys have summarised it pretty well there, and I think it's particularly nice to have Nick's opinion from an underwriting point of view. I guess sometimes I think it's sort of lost on us, and even sometimes as brokers, sort of the inner workings of what the underwriters are trying to do from a pricing point of view. So that's actually been really helpful, Nick. Look, I think from our portfolio point of view, there's definitely continued pressure downwards on those SME PI lines, and I just reiterate what Genevieve said. For those negotiated products and those larger insureds, they've definitely leveled off, and there seems to be some increased competition. But again, if accounts are claims affected or they're just a little bit out of appetite, we're still seeing, I guess, premiums remain steady, if not increasing in line with revenue and other risk factors. I think some of the key drivers for us and why we're seeing that the premiums and I guess negotiability on things like removal of exclusions, additional coverage enhancements, etc., particularly now, is just continuing rise of those MGAs and their impact that they're having on the local market. They just have the ability to innovate more quickly and service customers and service their broker partners very quickly. And I think it's putting downward pressure on premiums, particularly in that SME space for insurers.
As we speak, it's July and ASIC is bringing in some new informed consent rules. that we've been writing a lot on insurance business about. NEBA says they're important. They don't apply to all brokers, but I'm just curious about how they might apply to you. If they do, what you've done to prepare for it. Short, let's start with you.
Yeah. Look, I think this one's a bit of an interesting one, and I'm really keen to actually hear the other participants in terms of how they've been handling this. But look, I think from a broker point of view, it's been interesting to watch the additional compliance that have piled onto us in the last 2 years. And that might be a bit of a controversial take. I think whilst from our perspective, we can see how it benefits the customers, we can also see how the over-compliance burden is becoming a real drag on our team. Just the amount of documents we have to provide to customers now to remain compliant is significant, and I think there is a need for it, but I think we'd like to find a good middle ground when it comes to compliance. From an Omnisure point of view, we've been really conscious of the admin burden on our staff, and we've actually elected to essentially convert all of our retail customer business to a fee-only model. And this has basically been a way not to sort of, I guess, get around the new requirements, but at least for our portfolio, commission in our income has never sort of been a main point of contention for customers. It's more what value are we driving, and I guess, are we providing value, and are we representing value to their business as their trusted advisors? So we've elected to make that call, and I guess time will tell whether that's the right decision, but we've made a decision to move away from commissions for retail business.
Nick, you bring an underwriting perspective to this, and you obviously work through brokers. I mean, what's your view on these informed consent rules? Are they something on your wavelength, or do you not have to worry about them?
It's not so much about to worry about them, but it's something that definitely impacts the client-broker relationship far more than an insurer. I mean, we can quote business on a net or gross basis. That's fine, or we can give terms on each of those bases. As long as it's clear to the client, what the status of the commission is, that's really a matter for disclosure from the broker to the client. It doesn't really sort of impact how we go about our day-to-day business.
And Genevieve, what about you? Has it changed the way you're working?
So I'm not really in the retail space, but I think it does raise the bar in our industry around transparency and client understanding, and ensuring that our clients do understand the covers that they're purchasing and what's required from them. So I feel like it does matter for all brokers. At Willis, we're already quite heavy on compliance, and completely understand that it creates more of a burden. And I think if you spoke to any of us at work, we would actually say our role, like 80% of our role, is administration, like the behind the scenes. So I think it will pressure on brokerages, particularly smaller broking houses. But I think it is also important that our clients have trust, and the relationship there is respectful and trusted, and there's transparency. So, yeah.
Artificial intelligence, a big topic. And if you read the papers, like it's not the papers anymore, the digital online versions, you'd think it was ubiquitous and affecting everybody. But I'm just curious, in PI, is it actually a topic that your clients are bringing up at all in conversations, or is it not so important in that space? Genevieve, what are your thoughts?
Yeah, AI continues to be a topic of conversation. So it started up I would say about 18 months ago, more so. And that was really within the law firm space. I think it was because obviously they want to keep up with the game, but they're very cautious as well, because there has been a few instances in the papers where there's been firms getting caught out. It's now actually starting to come up in conversation with the professions in the construction space. So my architects, engineers, project managers are actually now starting to kind of query, does it affect our PI? Currently in Australia, PI policies I'm placing don't specifically exclude AI, but insurers are paying close attention, and Nick probably will have insight on this, onto how the tools are being used. And it's not really the concern around AI itself, it's who's ultimately responsible. So our clients making sure that when they're using AI, you're still backing it up with human oversight, and that it fits within your overall professional services. So using it in the back end as efficiency for your admin, that's fine. But are you actually going to AI for that advice that you're then providing onto your client, not checking it? Has it hallucinated? And yeah, so I think that's where the concern is.
And Nick, from the underwriting perspective, are you hearing much about AI or concerned about it at all?
Yeah, I pretty much agree with what Genevieve just said. To date, I've mainly seen it in occupations that are sort of involved in detailed research of publicly available information, whether it's regulatory issues or case law or things like that. But it's probably more widespread than that, to be honest. In terms of how PI insurers are dealing with it, certainly from what I can see, PI insurers are generally assuming that if AI is being used to research for reports or assist in compiling reports, any report generated using AI is still subject to risk management practices and quality assurance processes. So from that point of view, we see it as just another tool insureds can use, but it still needs to be subject to their normal QA processes before any such report gets released to a client.
And Shawk, is AI coming up in your conversations with clients?
Yeah, it certainly is, Danny. But again, I think the guys have basically hit the nail on the head here. I think it's definitely a space to continue to watch. I'm really interested to see what happens when we get our first professional negligence claim where AI has been significantly utilized. And as that sort of comes out in the discovery of the claim and how insurers are going to treat that then going forward, I think that's kind of a really interesting conversation and a sort of wait and see in this space. But just to briefly reiterate what the guy said, we're just heavily having conversations with customers to make sure where they are generating any advice, even in the back end, for their professional services in research or whatever it might be, that a person is reviewing that information and it's being signed off by someone who's appropriately qualified before it goes to the customer. And most customers have been more than happy to act on that basis. It's not really caused any problems to date. It's definitely opened some interesting conversations, but I don't think it's having an impact until from an underwriting point of view, I don't think it's having an impact until we see a claim, and then there might be some shift.
But before we let you go, is there something that is having an impact right now, or what's coming up in your PI conversations that's important? I'm sure.
Yeah. Look, I think a really big one for us at the moment is there's definitely been, although January and February were pretty slow from an M&A point of view, I think the M&A landscape's definitely picked up over the last sort of 3 to 4 months. And I'm interested to see how the others see this as well. But we're getting constant, I guess, queries and pushback from customers in terms of the need of runoff coverage. So it comes back to what Genevieve said, customers understanding their contracts and what their runoff requirements are in these contracts, be it professional services for any work that's been delivered or construction contracts, design and engineering professionals as well. Customers having a good understanding of how long they have to maintain that runoff coverage for, if they have to maintain the runoff coverage for, and then once they go on to either close their business or sell their business, under what structure is it being purchased or sold? What does the agreement dictate needs to happen with the runoff cover? And then I think we're just having a constant surprise conversation with the customers around what runoff cover actually costs and why they need it, and in many cases why they're contractually obligated to take it. I think it's just a point of contention for customers when they go to sell their business, and at the end of the day, they get this big bill, which was 3 to 5 times or 2 to 3 times of their annual premium from a PI point of view. It can be a sort of an unnerving conversation to have with customers, particularly when they're selling their business and hoping to sail off into the sunset.
Genevieve, what about you? Is it M&A or what's the PI risk that stands out?
Yeah, just what I had said earlier, a lot of discussions around contractual obligations is coming up, and we're finding our smaller consultants are getting a lot more pressure from the bigger projects to take on more liability risk and not really understanding that and going into that review and they're just willing to accept it and then not understand why it's not so easy for the PI insurer to take that risk on. So it's a lot of education around that piece we're finding we're having to do, and to make sure our clients engage us before they sign is always a better conversation to have than after they've signed. Another topic is actually, as always, the ESG. So we're finding particularly around regulatory compliance. So we're just making sure that clients are understanding their exposures, strengthening their risk management, making sure that that's part of their submission, that they've got protocols and policies in place around risk management, and just being proactive in that space.
Nick, what's a PI risk that's standing out for you right now?
And what I see, silent cyber continues to be topical, and I think it to a large degree, it continues to be a source of potential confusion for some insureds. Insurers have sort of a range of different ways of dealing with it, whether they provide affirmative covering their PI wordings, or whether they have an absolute exclusion, or something in between. I think it's still a somewhat confused space. At the end of the day, I think insureds who believe they have a real cyber exposure should be buying dedicated cyber products, which I'm sure all brokers, including Genevieve and Jack on the panel, would agree. They should be buying a dedicated cyber product rather than leaving it to their PI policy to respond to a cyber loss.
Well, thank you, Nick, and thanks, Genevieve, and thanks, Short. We'll leave our professional risks power panel there. Thanks for watching Insurance Business TV. Bye for now.